What's up everybody, Tom here with another video. In today's video, we'll be talking about why the SP 500 break above this level is so important to the markets right now. We'll also be talking about technical analysis levels for the Nasdaq, gold, silver, Bitcoin, AMC, Tesla, and more. Yesterday was a cracker of a day for hyper stocks, and of course, some squeezes did well as well. Things are actually acting incredibly technically in the markets right now. Stay tuned to find out more about the next levels. Alright guys, well here begins our recap of the markets for the 14th of June 2021, and it was clear to see that technology was absolutely blowing it out of the ballpark. We had Microsoft, Apple, Google, Amazon, Tesla all doing really well, and then we had the banks moving down, and this is consistent with the rotation that we believed would be happening. Value stocks are no longer the area that Wall Street wants to be in. They want to be in growth, and they want to be in technology and of course healthcare sectors at this stage. And when we break down the markets, you'll see why. Take a look at this. Nasdaq out in lead, 0.79% up. S&P 500 came in very strong at the close of the day. IWM, the Russell, and Dow Jones starting to recoup near the end of the session, but of course they're being lagged by some big companies like Caterpillar, etc. When we have a look at the actual sectors within those, we have XLK out in the lead, the technology sector. Real estate continues to do very well. Healthcare, utilities, IBB, all of them started recovering. What are the two worst? Materials and financials. I think this is clearly a rotation from Wall Street. We've been talking about it for some time on the markets, and it brings up some really interesting points that I've seen in the comments down below. So remember guys, if you've got questions, I do read them in the comments down below, so always ask them. It does help us out. So there's been two major concerns that people have. One of them is stock price breadth. So generally speaking, you want to see a market where all of the stocks are increasing and that you see a huge breadth of market movement. Now, we're never going to see that as good when you have just technology stocks and just these hyper growth stocks moving. And this has happened last time, it happened last year, and it ended up being not that great for the market. It actually happened at a very similar time as well. Think about it. We had June, we had July, we had August, then we saw weakness. Then, of course, we had that sell-off event, and then by the end of the year, everything was moving through that October-November period. So it's interesting to see stock price breadth. And here on the CNN Business Fear Greed Over Time Index, you can see that it's actually just been quite fearful, and it's actually improving at this stage with the overall indicators. Another one that everyone was asking me about was volume. And I think we just need to always remember with volume that it's super important to understand that when a market is fearful, you will get higher volume. When the market's going down, there's plenty of people buying and selling, heaps of people buying the dip, heaps of people selling to them, etc. When a market goes up, people will hodl, they'll hold down, they'll buy that stock, they'll hold it, they're not prepared to sell it to anyone else, which means that someone has to pay more due to scarcity principle. So remember, volume on the way up is generally less than volume on the way down. It's a very normal thing in the markets, and I just wanted to quickly let you guys know that. So dollar index, best place to start here today. Let's have a quick look at the markets here. You'll notice the strong support that we've had through that 89.60. We're at resistance here on the dollar index this week. We've talked about this in our weekend recap video, and I think if the market does get through this zone, what's our expectation? Well, basically we want to see the market go through this area, move above, and if it does, go back to something like this 91.40 area. So if we see dollar strength, that's where we expect it. Otherwise, trapped within an area or a zone, and you'll always notice that when you go out to the bigger time frames. It's why on this channel, we always talk about look at the larger time frames. Long leg doji, they are indecision candles. We're currently in that zone. So until decision is made either above or below, we're trapped in a range, and you have to trade it accordingly when you're looking at dollar index pairs. Yesterday was a pretty poor day for gold. We saw gold break out of our beautiful 8-hour trend line. Let's go over to the 8-hour chart. You'll see here, and instantly you'll notice this was a great trend line. We've had this on the channel for some time. We saw weakening events, which we talked about here, and we saw the fact that it was weakening and unable to make new peaks. It then came through the trend line. We teach a lot of this about in our course. You can find the description if you want down below about how to recognize a weakening trend line. Super important to understand. And then we saw the market break through and instantaneously go down to the next level. What a great level as well. I think we spotted this one fairly well. We spotted it in the private community. We talked about it, of course, in our YouTube live sessions, and the resistance becoming support. Now, did we get it exactly spot on to the price? I don't know if we did. Let's have a look. I had 1842.43. Let's see what it got to. 1843.85. So, you've got to be a little bit all around with this one. You don't want to just say, oh, I'm going to just take 1842. You need to look at the price, set a range, and once you've got that range, you can then dial in and have a look at how the trend is moving. And this was instantaneously purchased off, and it makes so much sense when you look at a daily. We had an amazing level around here. 50 exponential, 200 simple moving average, the green line. They're both intersecting at the previous point of resistance, which becomes support. Now, where's the resistance? This 20 moving average. I could see the market actually coming back up here, testing this, and I still think there'll be buyers around this zone. So if the market does choose to come back down, hopefully there's continued support for gold around this 1842.43 area. Good luck for everyone on that. Silver was a little bit of a different case. You'll notice it's stuck within the range. Silver's got this squeeze movement going on online at the moment. People are talking about that. That's still a thing. Clearly, it is showing in price because otherwise silver would be lower. Silver would be at this point 26.32. So be careful here. Stuck in a range. No clear breakout area. Of course, we are optimistically bullish on it just based on the price action that we've seen recently in terms of it's been up, it's been 2 steps forward, 1 step back. But until it closes above 28.20 with a daily close, we can't start to think about the 30 level. But that's what we will be thinking about, and we'll continue to cover it on this channel when it comes up. US oil, bit of a disappointing day yesterday. I noticed that the media is getting very hot on the collar, talking about $100 oil, which means we're getting incredibly close to the end. And it makes sense. We'd only had ever a full-time target of about 75, 76 on this. It's continuing to do what it needs to do. 4-hour 20 moving average, something I'd be looking at, this red line here. This is a great pullback zone. If you're a day trader, you can be looking at this. However, I will say there could be a deeper one coming because notice this candle here. Not the best type of candle. It should have already rebounded and made a new high. I don't want to see a new low underneath this area because then you've got a peak, a trough, a lower peak, and a lower trough going through the 20 moving average, and we could look at the 50 instead. So for US oil, I'm still bullish on it. However, I don't quite like what we saw today in the price action. That is not the thing that bulls want to see. And I also hate it when the mainstream media picks up a story and goes with it. That makes me feel nervous because it usually means it's not going to work out as well as it has been. AMC fans, you guys are trading very technically right now. And I was very impressed with the technicals here. These are the levels we set before the market opened. We had our zones. We had our 48. Of course, we knew if it broke through there, 52 would be the next level. It opened above 52. So this was always going to act as dynamic or act as a support level. You saw over here on the left-hand side, resistance, going to act as support. Where's the next most logical zone? Literally $60. And bang, it smashed straight into that area and then found sellers. Tried to make a new recoup, didn't quite get through there. If it did, where was our next level? 68.72. So this is acting technically, and that's good if you're a trader. You can see a little double top might be coming through in tomorrow's session, which will be the range, pushing it right back down to the 52. So it really remains, these are all the key levels, 48, 52, 40, 60, and then of course 68 if you get through 60. AMC fans, you should be happy that at least it's trading technically and you can more accurately spot the levels. Whenever something's trading technically, it makes me happy. When it's not, it makes me sad because it means it's very hard for us to figure out the exact levels on things and where they're going to go. Good luck out there, everybody, on those squeezes. Other squeezes were ripping tomorrow, ripping yesterday, but realistically, things like Corsair and stuff, as I've stated several times, the diamond hands movement where people want to hold the positions really only sits in GME and AMC. It's not in the other stocks. So remember, every other one is a short squeeze with the pumpy dumpy at this stage, and AMC and GME are the only ones that seem to be able to hold a decent value throughout the sessions. Tesla moving up yesterday, very weak considering the other hyperstock movements. I would have hoped that we would have made it to 635 for the Tuesday session. That's where I'm hoping we do get to if we continue this bullish strength. Anything past 635 should push us into 660 where it'll hit the longer term trend lines. At this point, Tesla still looks like a bit of a boring chart in terms of when you compare it against NEO and others. And you know what? NEO has been absolutely outperforming it because the chart just looks so much better. This one is just stuck. And no matter what time frame we look at, it's kind of nasty. I do believe it can move up here to the 660. We've been talking about that for a while, and I still think that this 560 zone, if you close underneath that will be incredibly negative for it. So have your trend line on the charts, continue to watch it, and we'll see what happens over the next couple of days. US 100 Nasdaq, well, we were right. The market smashed through. Well done, community. You guys get a clap. Good work, everyone. We got through. We smashed that level, 14,070, got destroyed. We can see on the 1 hour and 2 hour charts the pullback back to these little moving averages, which happened, and it got through. So what do we expect? I think a little bit of market pullback will be in order at some point. That will then come back to the 14,075. This previous level of resistance should act as a support zone, and then hopefully it finds some buyers and we can continue up and forward. If we're sitting at this level, it makes sense for us to now try to make through to 14,400, and that's going to be consistent with the S&P 500 targets we'll look at in a minute. S&P 500 is actually the one that's going to give us the top end range. That's going to be the closest. QQQ, Nasdaq again, very strong candles here, followed by the back of a huge closure. You can see any pullback back to this zone, previous resistance should act as support. It's getting very, very far away from the 20 moving average. So this is an incredible move, but it won't hold up forever. So even if it coiled above here now, so let's say we see a bit of a range above here and then it moves up, that actually will give me even more confidence. I love to see a good coil, and a lot of people hate it, but actually when you see a coil or a spring above a previous resistance, like this 1-2 resistance over here, this should give you tons of confidence when the breakout occurs, because it means the market's healthy, it's acting technically, it's resetting indicators, it's doing everything that you want. So far away from the 20, we start now to think about, should we be getting a little bit concerned? Not yet, I think, but very, very close to a little bit too far away. I'd like it to slow down and coil here. And a lot of you in the comments are going to say, no, Tom, we want to go to the moon right now, damn it. Well, we've got to wait. We've got to be patient. When we go over to the S&P 500, it was a lackluster day, but it was still up. Why? Because really with the S&P 500, we're seeing rotation. Financials down, other industries down, and then we've got the resurgence now of the REITs, we've got the resurgence of the technology, and they'll push the market up overall. But remember, the breadth isn't there. We don't have every stock moving up. Some, like John Deere, still look incredibly negative. Here's our community trend line all the way through the peaks, everyone. Look at this beautiful trend line. If the S&P 500 continues to do a very nice June-July run, we could expect it up near the 4,400. This will push the Nasdaq through to those 14,400 plus levels. And yeah, it's still looking this way. People have been talking about, but there could be some downsides here. There always could be downsides in the markets. It's just we haven't seen a level yet where this price action is telling us, oh, we need to be bearish. We saw resistance, bull purchase off this, even during that weakness that came off the top. Then we've seen 20 moving average here on the 2 hour continuously purchased off with a new high being reached yesterday. There's no bearishness currently in the price action, but we always want to remain vigilant and agile, and that's why it's trading. Every day something else happens, and what we need to do is leave our opinions at the door and follow that price action. We'll move over to the last one. We've got a pretty decent video here today. BTC shorts going through the roof still as the whales try to claw it back. But you know what, Mr. Whales? You didn't maybe anticipate that there was more news for the Bitcoin. And I tell you what, Bitcoin's news has been coming thick and fast in the last week. It's funny how that happens. Bitcoin now the leader of the crypto market once again. All that concerns 2 weeks ago, suddenly it's not a big thing. Crypto market, we are seeing Bitcoin getting its upgrade coming through. What's it called? Something like Taproot or something like that. And that's going to bring all these new fandangled things. I actually don't think the technology is that amazing, as we know, but it's great to see the community galvanizing and actually doing something about it. We saw the trend line get broken through. I think this is a pretty positive sign for Bitcoin. Is it out of the woods yet? No, it won't be until it gets past 42,000, 42.5. But I do think that it might pull back here, be met by buyer demand. And even if it comes back through and down below here, I actually think this somewhere around here is actually the base now. We can clearly see the accumulation playing out. We can clearly see there's demand there. Bitcoin is being adopted by certain countries. Of course, El Salvador, there's certain places in Africa as well that are looking at potentially adopting it. it's the real deal in terms of that type of stuff. And all these things help to solidify its price. So hopefully this trendline break was the serious real deal on the 8-hour and 4-hour chart, and any pullback back to the 36 or 37,600 or 37.8 or 38K is met by demand. So hopefully there's some buyers here and they purchase it through. We go test the 42, break through there, and of course then see some accumulation. Continue to be very vigilant here on the Bitcoin trades, but you'll notice that the altcoin market is way weaker, and the main reason is because Bitcoin needs to take charge. And once it does, the altcoins will move after the initial impulsive move for Bitcoin. So if it gets through 42, 42.5, goes up to 50, it's going to be the first outperformer. It's then going to sit there and do nothing. So it's going to stay in its little range for a while, and then all the other altcoins will move with it, Ethereum, etc. And that's going to be, of course, the opportunity that many people want to get hold of. That's what usually happens, and I'm sure it will happen again in the crypto markets. Stay safe, everybody out there, and I hope, as always, you make as much money as humanly possible, but only when it's safe to do so. Remember to subscribe, hit that like button, and we'll see you 1.5 hours early before the New York Open. Bye for now.